The two questions on everybody's mind are how the heck do we manage all this inflation and what happens if the market crashes? What do we do then? So let's talk about this. What's up everybody? I am Jaspreet Singh from theminoritymindset.com where money minds rethink rich. Everybody is facing a financial dilemma in their minds right now where they're saying, okay, we have this crazy inflation going on right now. But what is the real cause of this inflation? The Federal Reserve Bank and the government keep saying it's transitory because they keep saying it's supply chain issues. But I think most financially educated people understand that, sure, there are supply chain issues going on, but we do have a lot of money printing. There's a cost to that money printing. So we don't have a real crystal ball to gauge how much this inflation is because of supply chain issues and how much this inflation is because of the money printing. And then on top of that, you have this potential talks of a market crash. Because when you see inflation happen, you want to move your money out of cash and you want to buy assets. But the risk is what happens if the economy slows down? Because our economy is not recovered yet and it's not recovering as fast as we would like. So if the markets crash, then we would see deflation in asset classes, in which case it'd be better to hold on to cash and invest then. So what do you do? So we're seeing a lot of inflation, which is when the value of our dollar gets diluted, causing the price of things to go up. And then the Federal Reserve Bank keeps saying that the inflation that we're seeing is because of supply chain issues, and so it's transitory and it will get better. And so then if you want to counteract this inflation, you want to move your money into assets. You want to own assets as opposed to holding onto dollars, but asset prices are at record highs. And so if we see a market crash happen, that means you're buying into these record highs, and then you could have just bought at much lower prices if you just waited. So what do? Well, I'm going to be answering that question today, but before I get into that, you can start by smashing that thumbs up button below. And if you're looking for some extra guac, some extra Minority Mindset content, you can check out some of our newer Minority Mindset channels. We have the Minority Mindset news channel where Nate publishes daily finance and business news updates every single day. You have the Minority Mindset clips channel where you can watch shorter Minority Mindset videos. These are somewhere between 8 to 12 minutes long. And we also have the Minority Mindset Spanish channel so you can watch our content in Spanish. So if you want to check out these channels and subscribe, I'll put the link to where you can do that in the description below. Right now, we've been seeing massive amounts of inflation across the board. I mean, home prices are skyrocketing, car prices are skyrocketing, grocery prices are skyrocketing, vacation costs are skyrocketing. The Heinz CEO has come out and said that this inflation that we're seeing is permanent. So we're going to be seeing these permanent rising in prices. You've seen dollar stores raise the price of their dollar items to now higher than $1.50 or $2. And so we've been seeing inflation across the board. This is where the Federal Reserve Bank and the government have come out, and they keep saying that the inflation that we're seeing is because of supply chain issues. So the supply chain issues that we're seeing is that we manufacture a lot of stuff not in America. The United States manufactures a lot of stuff out in Asia because it is cheaper to pay somebody in China or Vietnam or India to now manufacture something and ship it over to the United States than it is to make that product here. Well, because of this pandemic, you saw manufacturing plants around the world, including Asia, shut down. So then these plants started not making products. And then they started getting backed up with more and more orders. And so now you have manufacturing plants that are still not always operating at 100% capacity, but they have all these back orders from companies in the United States that want to produce products. So the companies in the United States are calling out their manufacturers in China and India and Vietnam, and they're saying, send us more stuff. And these plants are now working overtime to produce more stuff. But even if they are able to produce stuff, this stuff cannot come into the United States because the United States ports are now backed up. So if you have a manufacturing plant in China that's producing t-shirts, this plant has to first produce the t-shirt, which is that first hurdle and everything that's going on right now. Then they produce that t-shirt and they got to package it up, and then they want to send it to their boat. They got to send it to their own shipping company, which is now also backed up in China and these Asian countries. And then when it finally gets picked up by a boat, it has to travel the seas and come to the United States. So now you come over to the California port, well, there's a long line, and you might have to wait days, if not weeks, for somebody to come and take the stuff off of your port. And so now you have the port in the United States that's backed up, and then once it finally gets off of the port in California, now you need a truck driver to deliver this product to whatever warehouse or wherever this product is going to go. Well, the United States is facing a truck driver shortage. We have a labor shortage across the board. And so now it's taking longer for something to come from the port into the country because we have a shortage of labor in the United States. And so the supply chain shortage is happening across the board, across the country, across industries, where it is becoming harder and harder to manufacture products because people cannot get their products from overseas. And even if you get your product into the States, it's taking forever for it to come into ports and then for it to finally reach a warehouse. This is where finally you had some ports in California come out and say that they're going to open up their ports for 24 hours a day to kind of ease this bottleneck. That way we can get more of these containers into the country. But that doesn't solve the second issue, because now once the shipping container comes into the country, you'll still need truck drivers to get these products to wherever they need to be. We still have a very severe labor shortage in the United States, which means that it's harder to find drivers to now deliver products from one place to the other. And now we live in a world where people don't just go to Walmart or Costco to buy their products, they get it delivered to their house. So we need more drivers now than ever before, but we have a shortage of drivers because now drivers don't just have to deliver products to a warehouse, which then go to a store where people go to buy. Now these products are delivered to a warehouse, and then these products have to be delivered from a warehouse to somebody's individual house. So we have a bigger need for drivers, we have a bigger need for this type of labor, but the supply of these people is just not available. This is what the Federal Reserve Bank and the government are blaming all of our inflation on. They're saying that our inflation has to do with these supply chain issues that I just talked about. And when we get into 2022 or maybe even early 2023 potentially, once these supply chain issues ease out, that's when everything will go back to normal in terms of pricing. Now, that's a very fair argument. It doesn't address this inflation. I'll get to that in just a second. But chances are we are going to see a shift in our products in the United States come late 2022 and into 2023 once these supply chain issues get taken care of, because usually when you see these types of massive demands and limited supplies and companies try to fix it, what you see happen is it flip. You'll see a massive supply and then not enough demand. And then you'll have a excess, a glut of a lot of things. You might see an excess of cars. You might see an excess of certain products, of certain goods. And then companies will say, oh my God, we have so much inventory now and nobody's buying it because people had already paid these excessive prices in 2020 and 2021 and the early part of 2022. Where now we have to cut our prices because we just have so much extra stuff. There's a very good chance that we could see this type of price fluctuation due to supply chain issues. Right now, we have very low supply and a lot of demand, which is causing the price of things to go up because companies know that they don't have a lot of products. And so to limit the demand for their products, they're having to raise the prices because one, it's costing them more to get the products, and second, they just don't have stuff to sell, so they want to raise their prices because if they can't sell stuff, you might as well sell more of it because people are still willing to pay you these higher prices. But if we start to see a new influx of supply, if we start to see the supply chain issues get sorted out and companies had placed too many orders because they keep thinking that people are just going to keep buying and buying and buying, well, eventually we could see a shift where then you have a whole lot of supply and not enough demand. The most apparent example of something like this is just toilet paper. If you remember, when the 2020 pandemic happened, there was a normal supply of toilet paper and then everybody started hoarding toilet paper. So now all of a sudden, stores ran out of toilet paper and toilet paper became a very hot commodity. Now people were paying tons of money for just one roll of toilet paper. You saw companies, you saw stores, you saw gas stations inflating the price of the toilet paper because there was a very limited supply of toilet paper. So people started hoarding toilet paper, buying toilet paper because prices of toilet paper kept going up. And then eventually, it took a little bit of time, but eventually toilet paper came back on the shelves at stores and toilet paper prices came back down because people realized that toilet paper was just, well, toilet paper. We will probably see a lot of price fluctuation in goods in 2022 and 2023 as the supply chain issues, as the supply chain bottlenecks go away. But that does not take away from the fact that inflation is also here to stay. Inflation, if we're just focusing on the core financial definition of inflation, that's when the value of our dollars go down, which causes the price of things to go up. And this type of inflation is caused when we see a larger money supply. When the Federal Reserve Bank prints more money and they inject this money into our economy, now all of a sudden our economic system has more dollars floating around, which ultimately makes the value of each dollar go down. So as the money supply increases, the value of each dollar goes down. Between 2020 and 2021, we saw a historic amount of money printing and stimulus. Now, this is good in the short term because if you are unemployed, you get an unemployment check. and you get a stimulus check. Or if you're a corporation, you might get a bailout. Or if you're the stock market, you might get a bailout in the stock market, with the Federal Reserve Bank just constantly buying up bad assets. This is good in the short term because now all of a sudden you get a check, and so now you have money to spend. But money is supposed to be a representation of value. And so if the Federal Reserve Bank can just print this money essentially out of thin air, what is the real value of the money that they're printing? Well, they're betting that the value is in the fact that the US dollar is the world's reserve currency, that the United States government is the most powerful government, you have the most powerful military. But the reality is anytime you print more money, the value of each dollar that you have goes down a little bit. Like between 1913 and now, the US dollar has lost something around 96% of its buying power, of its value. Like the Kraft Heinz CEO has come out and said that inflation is permanent. What he says is that people need to get used to higher prices because of the inflation that we're seeing across the board. Like if we go back in time to 1970, the price of one Coke, the drink, would cost you 10 cents. Now you're going to be paying at least on the very low end, $1. You're not getting 10 times more value today. It's just that the value of your dollar has dropped by that amount. Now, the question that every financially educated person is asking is not, are we seeing this or this? Because every financially educated person knows that we're seeing both this and this. The question is, how much of this is permanent and what do you do because of that? Well, anytime you see more inflation, that's a bigger reason for you to want to move your money from dollars, which is being diluted thanks to this inflation, into assets, things like real estate and stocks and metals like gold and silver and cryptocurrency. But the risk right now is what happens if you buy at the peak and then markets crash. I can't predict the future. I have no idea what's going to happen tomorrow, let alone next year. Nobody thought that a pandemic was going to come in 2020, shut down the economy, and cause the stock market to collapse. Nobody could predict that. And so what I like to do is just pay attention to what's going on and make my investment decisions based off of that. Home prices have been skyrocketing, the stock market has been skyrocketing, cryptocurrency has been skyrocketing, along with the price of everything else around us. And so there's a couple of reasons for why that is. One, people are scared of inflation, so they're moving more of their money to assets. And the second reason is, well, there's a lot of dollars out there. And anytime you have more dollars in circulation, this money has to flow somewhere. And so if you just think about this practically, when the 2020 pandemic hit, the economy shut down, the government started sending out free money. You had bailouts on one hand to corporations, and then you had stimulus checks to people and unemployment checks. What happens is when a corporation gets a bailout, they're going to invest this money into the company. They're going to try to pay off their debts. They're going to try to invest in new operations. They're going to try to create new products. When people get these stimulus checks or unemployment checks, they spend this money. So when people get their stimulus checks and unemployment checks, most of that money is not going to go to Walmart or Amazon, or it's going to go to Lululemon, or it's going to go to Apple, or it's going to go to any number of different companies. And so now you have people who get this free money from the government and they spend it at these corporations, and now this money ultimately flows up to the rich and the financially educated. So what happens? You have these corporations which now show higher revenues, they have higher profits, when in actuality their actual profit per value might not be that much higher. It's just that there's a lot of these cheaper dollars out there, and so these corporations have more dollars on their books, which makes them more attractive as an investment. And so now corporations are making more money, people have less money, you see a bigger divide between the rich and the poor. But this is where you really need to get financially educated and figure out, okay, what does this actually mean? The first thing you got to do is you got to be educated in anything that you invest in. If you want to invest in real estate, stocks, crypto, you have to educate yourself. Because if you're just chasing what's hot and you're trying to get rich quick like you see other people doing, well, then you're going to run into emotion. You're going to buy when it's high, you're going to sell when it goes low, and you're going to lose money. This is why most people lose money when they invest, because they trade and they invest on emotion rather than financials. If you want to learn more about the how-tos of investing, you can check out some of the videos on our channel, or you can check out our blog at theminoritymindset.com, or you can check out our Stock Market Insiders program. It is a coaching program where every week you get access to a live coaching session with one of our stock market coaches. And so every week you will learn a new stock market concept, and then you will learn how to apply what you just learned to what's going on in the market right now, because these are live classes, these are live lessons. And then you also get access to an exclusive group of serious investors. You get your exclusive community that you can chat with, so you can network with other investors, you can talk about investment ideas, and you can talk about everything related to the stock market and what's going on right now. So if you want to learn more about that, you can try it out with a free 10-day trial. This way you can actually try it out, see if you like it. You can check out the coaching session, you can watch our previous sessions, you can get our free stock market class, because you get this class for free when you join Stock Stock Market Insiders, and you can chat in the community and ask your questions. You can try it all out for 10 days and then see if it's right for you. The program is affordable, so if you want to try it out, see if you like it, and then decide, you can try it out with a free 10-day trial, and I'll put the link to our Stock Market Insiders program in the description below. You have risk if you invest today, and you also have risk if you don't invest today. If you invest today, the risk is that you see a market crash, and now you see the value of your assets drop by 20% or 50%. But the risk if you don't invest today is now you're holding onto dollars which are being eaten away because of inflation, and then when you go to buy assets, then you're ultimately paying a higher price. So what is the right answer? Well, there's really no this is what you need to do. You have to pay attention, and then you have to make the right decision based off of what's right for you. So what I like to do is I understand that, yeah, there is a risk for market crash. If a market crash happens, that's when I want to come in and buy more aggressively, because anytime you see a market crash, that's when assets go on sale. So that's when I want to come in and buy even more aggressively. But that doesn't mean that I want to wait for a market crash to start investing, because that also means that you lose out on the upside that you're seeing right now. And you also can see your dollars get eaten away because of inflation. So how do you balance that? I invest my money with two different strategies. I have a passive strategy and I have an active strategy. My passive strategy is when money automatically just gets withdrawn from my account and it goes into my investments. So I have a passive strategy for stocks and I have a passive strategy for cryptocurrency. I have an active strategy for pretty much all kinds of investments. Startups, cryptocurrency, real estate, stocks. But with my passive strategy, what I do now is I invest my money passively into stocks and cryptocurrency and metals too, gold. But I have a passive strategy where now I have a designated day. In the stock market, it's every Wednesday, and in the cryptocurrency market, I have a dollar cost average strategy where every single day some money is taken out of my account and it goes into certain cryptocurrencies. This happens all the time. It doesn't matter if the market's up or the market's down. I'm just going to continually keep passively investing my money into these things that I want to own for the long term. So in the stock market, these are ETFs. These give you exposure to the general market. And then in the cryptocurrency market, it is different cryptocurrencies that I want to own. So these are things that I want to own for the long term. And I'm not trying to time the market. This just happens consistently. So over time, I will continually acquire more shares and pieces of ownership in these assets. And that's it. It's on autopilot. I don't touch it. It happens when the market's up and when the market's down. Then in the active strategy, this is where I'm being a whole lot more pickier right now. I love investing in real estate, but it is much harder for me to find real estate deals right now just because prices are so inflated. It is much harder today to go out and find a real estate deal that's paying with positive cash flow at a rate that makes sense for me. I was recently in Austin, Texas, and I was there for a financial conference, and I decided to look at some of the real estate there, and some of the real estate there was selling at a 1.5 cap rate, which means that these properties were selling for a 1.5% return. So if I buy $1 million property, this $1 million property on paper would pay me $10,500 a year. That's not that much money for a $1 million property. It would take you almost 100 years at this rate to make your money back. But the selling point that everyone has is you are going to see very high rent growth year after year after year. So they're marketing the properties not based off of how much money they're making today, but based off of how much rent you will get next year, the year after that, and the year after that. I don't like to speculate with this type of positive cash flow. Sure, it might happen, but it also might not. I want to buy investments based off of how much money I'm making today, as opposed to how much money it could potentially make in the future. That's speculation. This is investing. I like to invest. I don't like to speculate. Yes, it could work, but it could also fail. And if it fails, then I'm the one that has to pay the price. So when I'm investing my money, I'm being pickier than ever because I'm making my investment decisions based off of what I like, based off of today's market. And if there is a market crash, if the economy slows down, I want to make sure I factor in that. That way, if I have to lower rents because the economy slows down, I will still be okay. It's the exact same thing with stocks. When I invest in individual companies, I'm looking for companies that I want to own for the long term that I believe are undervalued. Now, I'm not going to chase companies. I'm not going to get emotional and try to overpay. I'm just going to wait and try to find a company. If I don't find one, I will wait. But again, it's all about me being pickier with my deals. It's the same thing with startups. I like investing in startups. I have been way more pickier now because valuations of a lot of companies have been skyrocketing. I did recently just make an investment, but I'm again being pickier than ever. So when we talk about investing my money, I am not trying to chase things. I understand that inflation is happening. I understand that this is going on, but I'm still not trying to chase the market. I'm not trying to chase something and buy something and overpay for it just because I'm worried about the dollar collapsing. I'm not worried about the dollar collapsing. I am worried about inflation, but I don't think the dollar is going to collapse right now. Now, please do me a favor. Don't just blindly listen to what I say and follow the same thing for yourself. You have to do your own research. You have to do your own due diligence, and you should never blindly listen to a random guy on YouTube, because what's right for me is not necessarily right for you. So you need to understand and do what makes most sense for you. And this really just starts by understanding your investment horizon. If your goal is to invest for the long term and you do see a market crash, well, then all you do if you're investing in things that are strong, that will make it out, is you just hold on. I mean, even if you invested before the 2008 crash and you held on, you would have made money because asset prices, stock market prices, and a lot of real estate prices are higher today than they were then. Now, sure, you could have made a lot more money if you bought during the crash, but you cannot predict when a crash is going to happen and how big it's going to be. So what you should do is you just invest and be picky with your investments. That way you don't overpay. And then when a market crash happens, it's not a matter of if, it's a matter of when, because every asset class has its booms and busts. It's just the way our economy works. When the crash happens next, whether it's in 6 months or 6 years or 10 years or 20 years, whenever it happens next, that's when you come in and you buy even more aggressively. That means now when you have your extra cash to invest, you just got to be pickier with your investments and don't overpay for your investments, because you'll have more investment opportunities that come your way. But the thing that you need to understand, which will help you guide what you do with your money, is understand the why. Why do the Federal Reserve Bank or the government want or not want inflation? Because you'll keep hearing the Federal Reserve Bank and the government talk about how they want to control inflation, but you really need to understand what it is that they want to do. Now look, I have trust issues. It is hard for me to trust what the Federal Reserve Bank says and what the government says just based off of what they say. I like to look at what they actually do. And so the Federal Reserve Bank and the government have an incentive to create more inflation. And this might run counterintuitive, because a lot of people think that, hey, inflation is not good because now the prices of everything keeps growing way faster than my wages. And that's why for the majority of people, inflation is not good. But the government needs inflation. The government needs inflation because right now the government has something around $29 trillion worth of national debt. And the only way that they have any ability to pay this off is if they see more inflation. Because if you see more inflation, that means now the government can pay back this $29 trillion with cheaper dollars in the future. Because if we saw deflation, the price of things go down, that means your dollar is becoming stronger, and that means the United States government would have to pay back this $29 trillion with more expensive dollars. That is going to be very hard and nearly impossible for the government to be able to do, which is why the government and the Federal Reserve Bank are working to print more money to cause more inflation, because this more inflation will ultimately make paying this debt back cheaper. So going back to the question of, is this inflation transitory and what's going on with all these higher prices? Sure, we are going to see price fluctuations in a lot of things. We are going to see the price of some things come down. We might even see the price of some things come down drastically because some industries might have overproduced something. We could see an excess supply or a glut of certain products in certain industries, which would cause the price of these things to go down, which is good for the consumer, not necessarily good for the economy, but good for the consumer. But the real question is inflation. And this isn't something that just happens overnight. Inflation is something that really kind of takes time to build, because as more and more dollars get absorbed into the economic system, that's when you start to feel the effects of inflation. And this is not going away. We have printed an insane amount of money in 2020 and 2021, and we continue to print money, and we are going to feel the cost of this. This is going to dilute the value of our dollar. It's going to dilute the value of people's savings. I mean, people's savings accounts are not even paying them anything right now. And so, yeah, we are going to see more inflation. It is a fact. So this is why you need to be smarter with your money. The question is just, how do you do it? And again, be smart. Don't chase assets because you're worried about inflation destroying your dollar, because then if you overpay and you see prices go down, well, then you're going to be the one paying the price. It's all about being smart. That way you can make financially educated decisions and knowing what it is that you're investing for. And this goes back to your financial education, knowing what your strategy is, knowing what your goal is, knowing what your investment horizon is, and then learning how to analyze your investments. That way you don't overpay, and just understanding what it is that you are investing in. If you like what you saw so far, then you're gonna love this. If the government offered you $10,000 for free with no strings attached, would you take it? Now, let me add a little caveat to that question. What if the government gave you $10,000 for free with no strings attached, but now if you took this money, then somebody else might not get it? Would you take the $10,000 now? Now I'm going to add one final detail to this question. What if the government gave you $10,000 for free with no strings attached, but if you took this money, then somebody else might not get it, and you understand that this $10,000 that the government is giving you for free is somebody else's tax dollars. Would you take this free $10,000 now? Weird question, right? Why would the government randomly come to you and offer you a whole lot of money for free with no strings attached? Well, this is exactly what happened with me, except it wasn't with $10,000. It was with many times that, and I had to decide if I was going to take this free government money or not. You might have heard of the PPP or Payroll Protection Program that was created by the United States government to give business owners some relief during this pandemic and economic crisis. Essentially, this PPP program says that if you run a business, the government will give you a loan of up to 2.5 times your monthly payroll expenses. But here's the catch. If you use this loan money in your business and you don't fire any employees, then this loan will be forgiven and you don't have to pay the loan back and you don't have to pay any interest on the loan. In other words, it's free money, like a stimulus check for your business. Minority Mindset is a financial news and education company, and you can learn more about us on our website, theminoritymindset.com. And we make money through 3 ways: advertising, business partnerships, and selling our own products and courses. When this pandemic hit, views on our website and our YouTube channel went up, but our ad revenue got cut in half because businesses stopped paying money for advertising because they didn't have money to pay for advertising. Then some of the businesses that we had partnerships with told us that they can't afford to pay us anymore, so they were either going to shut down their partnership division or they were going to downsize on it. Now, I have a team of employees whose salary I have to pay for. I have to pay for rent and utilities and our software fees, and on average right now, our expenses are between $25,000 and $50,000 a month. So imagine this. All of a sudden, your ad revenue gets cut in half, and some of your business partners say that they can't pay you as much as they were, or they can't pay you at all, and you still have $30,000, $40,000, $50,000 worth of bills every month. Now, we're very fortunate that we could keep working even when the economy was shut down, so we got creative and we doubled down and we shifted our strategy, and then we tripled how much content that we were producing. That way we could make up for these economic changes. It ended up working out great for us because we were able to learn quickly and we grew a ton and we built some amazing new partnerships. But naturally, this comes at a cost. Like, I still have to pay rent for our office even though our whole team is working from home. So I'll have to pay tens of thousands of dollars in rent for an office that we're not even using, because that's the price that I have to pay to make sure that my team is healthy and safe. This is why the government created the PPP program to help businesses in the short term to cover these costs. As a business owner, I don't qualify for an unemployment check or a stimulus check, but I do qualify for a forgivable loan that I can use to help pay my employees' salaries, to pay my rent, and to pay our business bills. Technically, this money is a loan, and if you're subscribed to our YouTube channel, you know my thoughts on taking out a loan for things that you don't need. And if you're not subscribed to our YouTube channel yet, you should do that. But this PPP loan is a unique loan because I could take out tens of thousands of dollars to help cover our business expenses, and I wouldn't have to pay this money back. I wouldn't have to pay any interest on this money, and I wouldn't have to pay any taxes on this money. Forbes even wrote an article saying that if you take out a PPP loan worth less than $2 million, you don't even need to show a financial hardship to qualify for loan forgiveness. So if you use this money in your business, it is literally free money. My bank told me to get this PPP loan. My accountant told me to get this PPP loan. My friends told me to get this PPP loan, but I said no. I didn't take out a PPP loan. We paid rent out of our pocket. I made sure our employees got paid, and we paid our higher costs. That way we could stay focused on what we do best, our business. At this point, you probably think I'm crazy. Why would you turn down free money, Jaspreet? The government is essentially begging you to take this money from them. Well, there's a few reasons why I said no to this free money. First, I don't want to take this money away from somebody else who might have actually needed it to stay in business. There's a limited supply of PPP money out there, and if the funds dry up, then a business that actually needs the money to stay in business might not be able to access the cash that they need. I know I'm not taking out a huge pot of the PPP money, but I want to do my part. Second, there's a cost to free money. In a nutshell, the more money that our government prints, the less each dollar that we have is worth, and the more expensive that our life becomes. So your rent becomes more expensive, your grocery bills become more expensive, and your medical bills become more expensive, and now you have a bigger divide between the rich and the poor, and now your taxes go up. As you can probably tell, I'm not a fan of the government printing unlimited amounts of money. I want to see financially smart spending. That means people and businesses doing their part to take care of their finances and knowing knowing how money works. That way, we don't have to rely on the government to take care of ourselves. This is what financial education is all about. So if I say this and I believe this and then I teach smart money habits and I teach financial education, and then the minute the government offers me free money, I go run and take it, especially when I don't need it, that will be kind of hypocritical of me. As a company, we are fortunate enough to continue running our business from home, and we're fortunate enough to plan ahead. I had worked to save up 6 months worth of expenses in our business bank account. That way, if something crazy were to happen, like a pandemic came out of nowhere, we could continue running our business like normal without firing a single employee, even if we didn't make a penny. And on a more personal level, taking the free money, especially when we don't need it, didn't align with my personal values. As you may know, I am a member of the Sikh religion, which is why I keep a turban and a beard. And yes, it's pronounced Sikh, not Sikh. And our religion has 3 pillars. Nam Japo, which means remember God. Vandshako, which means serve others before you serve yourself. And Kirt Karo, which means earn an honest living. It is against my religion to ask for a handout or welfare. That might be partially why I am the way I am financially, because we believe, and it is ingrained in our culture, that money must be earned honestly and ethically. I wouldn't feel right taking this free money because we don't need it. And I know that if we took this money, then another business that might actually need the money might not get it. And I know the cost that taking this free money would have on your taxes. Look, I understand the value that this PPP program has. I'm not trying to make anybody feel bad for taking this money. I have actually encouraged many business owners to go out and take this money so that way you can continue running your business. But for me and our company as leaders in the financial space, it is important for us to do our part and lead by example, even if that means turning down a whole lot of free money. This is where financial education comes in handy, because financial education is all about using your money the right way to build your own wealth. And if you're looking for a way to up your financial education, well, that's why we wrote a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. You can get a free ebook and start reading our financial education emails by clicking the link up here or by clicking the link in the description below. By the way, our financial education emails are separate from our financial news emails. Thank you for watching. If you enjoyed this video, here's a video on things you should not do when you get paid that I think you love. And while you're at it, download our free guide on how to start making money in the stock market. And as always, keep hustling. Now you're in your 40s and you're seriously starting to think about your retirement, and now you got to stop playing catch up because nobody taught you to start investing your money when you were younger.